Hey everybody, it's Jason, co-founder of mapsignals, coming at you with the 5 stocks you must buy for August. 5 best stocks to buy now. So I want to just get right to it really quickly. What do we do? At mapsignals, we look for outlier stocks. Okay, there was this really cool professor, Hendrik Bessenbinder. You can look him up. He studied 26,000 stocks since the 1920s, and he wanted to see what percentage of stocks are responsible for all those great gains over bonds, right? Have you heard people say stocks are better than bonds historically? Well, yes, they are. But you know what? There's a little caveat. Only the outliers are. He proved that only 4% of stocks account for 100% of the gains above bonds since the 1920s, over the last 100 years. That is crazy. That means if you're not in the outliers, you're wasting your time. You'd be better off just buying bonds. Granted, rates were much better back then than they are now, but that just points, you got to be in the outlier stocks. Did you know only 1% of stocks accounted for 50% of the gains? That is nuts. We're talking about 260 stocks accounting for 50% of the gains of the markets above bonds out of 26,000. That's what we do. We focus on outlier stocks. How do we find them? Stocks with great fundamentals, growing sales and earnings, profits, great technicals, being bought up by big money. And that's how we do it. So let's get to the 5 stocks you must own today. I am going to share my screen over here so you can walk along with me. Let's do that now. How do I maximize this? Finding my way around the computer. Apologies. So here we go. Should be looking at my screen right here. First stock, DR Horton. They are a home builder, DHI. Over here, you can see these big money signals. I'm going to click on 1 year so we can zoom in that chart. You see a lot of big money coming into this stock, a couple of sell signals, big ramp up, and then all of a sudden we peaked right around May. We saw a sell signal and the stock has pulled back. That's our opportunity. Why is it our opportunity? Well, this stock scores great in terms of fundamentals, 83%. Technically, it's a little weak. Overall, it's got a map score of about 69. And it has been on our top 20 report. This is the big money buying the best stocks. Look at that. Luke likes to call it the stairway to heaven, right? Why? Because since the first time it's been on there, it appeared around December of 2017. It's up almost 1,000%. So going back to this chart up here, not to confuse you, if you get a little sell signal on a stock with phenomenal fundamentals, making great sales and earnings, that's when you want to strike. So are they? Well, let's look at it. They got 1 year sales growth of 15%, pretty good. 3 year sales growth, 13%. Earnings growth 1 year, 50%. 3 year earnings growth of 34%. And guess what? They make money, 24% profit margin. They don't borrow too much. The forward PE seems pretty cheap at around 7.4 times earnings. And they got a market cap of 31 billion. This is an outlier stock. It has appeared on our top 20, 28 times since we went in business, July of 2014, 65 buy signals. We're seeing some big money buying in the past 30 or 90 days. So that's a winner. Let's go to number 2. The number 2 stock we are going to look at is Celsius Holdings, CELH. Okay, this is a technology company. Look at the 1 year chart here. We see a lot of big money buying. And when that big money rushes in, boom, it lifts that stock higher and higher and higher. It's pulled back a little bit. Let's look at when it appeared on that top 20 report. Boom, boom, boom. These blue lines is when it rose to the top, the creme de la creme. Very recently, mind you. The last one was right here. It's hard to get to, was June 8th. That was just last month. Okay, we see a lot of big money buying. Fundamental score 75, 85.3 technical. It's a strong stock. Since it first was profiled in 2020, it's up 400%. Okay, does it have the juice? Yes, it does. Let's look. Look at that 1 year and 3 year sales growth, 74 and 54%. Massive. 1 year earnings growth, it's down. 3 year earnings growth, it's down. It doesn't concern me. It's a young stock. It's coming into its own. It's got a massive profit margin, 45%. They hardly borrow any money at all. It does have a strong PE, but these big young growth companies tend to grow into their PEs, not have prices fall to match where they should be. They grow into them. It's a young one, 5.3 billion market cap, so it might get a little bumpy. It's a maturing outlier. The rest of today's stocks are maturing, not established. That's where we can find the biggest bang for our buck in the years to come. It's been 12 times on the top 20 since July of 2014. Let's move on to number 3. Tencent Music Corporation. Okay, this is a China stock. China fears IPO, China's cracking down. Oh my God, oh my God. You know, it's all doom and gloom. And that's kind of when we want to strike. This stock has been pummeled. I think it's down like 50% in the past, 5 months or so. It is ugly. But look, there was big money buying heading into it. And all of a sudden it got punished with that Archegos blow up in February. Subsequent selling in March and April, as you can see here. But it has been on the top 20 report for a little bit recently, okay? It has appeared since July of 2020, and it is down substantially. Why? Because on top of that Archegos scare, now there's the China scare. But let's look under the hood. Should you be scared? 1 year sales growth of 15%. 3 year sales growth of 40%. 1 year earnings growth, not that great. 3 year earnings growth, 50%. Gross profit margin, 31%. They don't borrow a lot of money. The PE is reasonable. It's a $10 billion company. It was like a $20 billion company just a couple of months ago. It's maturing. It's been on our top 20 list 10 times since July of 2014. I don't think people in Asia are going to stop streaming music just because there's China fears and a hedge fund got caught wrong way holding this stock and had to liquidate it. So that's our number 3, and that represents potentially great value if you can stomach some volatility and be patient. Number 4 is Calix Incorporated, CALX, another technology corporation. We saw some big money buying throughout the last year, took a little bit of a break here. We haven't seen any signals recently, but it's pulled back a little bit from its peak. What I like about it is we saw some recent signals. So again, it's a newcomer. It's only been on the top 20 a handful of times recently. What's important is what is, again, under the hood. 1 year sales growth and 3 year sales growth, pretty strong. 3 year earnings growth of 45%, a gross profit margin of 49%, borrowing hardly any money. That is juice under the hood. Wall Street recognizes it, big money recognizes it, they buy it, and they hold on for a long-term gain. The PE ratio at 37.5, a little high, but it's not crazy. And this one's a really young one, 2.7 billion. It can easily go to 27 billion or 50 billion. A lot harder for, a $500 billion company to become a $1 trillion company than a $2 billion or $3 billion company, doubling or 10xing. That's what I like about it. It's been on the top 20 since July of 2014. It is a maturing, upcoming outlier. Let's go to our final stock is Brooks Automation. This is a beauty. Okay, we can see the big money buying in the last year. You can sort of explode this out and see what that means, how that impacts things, and how you can get that flooding of money. These sell signals clearly look like they were opportunities in retrospect. Has it been a top 20 leader? Well, look back. You tell me. When big money comes in, buys it, yeah, you got to be patient to see some of these gains. There was a big drawdown. That was last year's pandemic, but look at what happened since. This thing is up since it was first profiled on our top 20 in 2007, 586%. That includes some back-tested data there because we went into business 2014. So let's look at Brooks Automation under the hood. 1 year sales growth, 15%, 3 year sales growth, 19%. We love that growing. 1 year earnings growth, massive, 121%. If I were a business, which I am, I want to see growth like that. 3 year earnings growth of 43%. They have a chunky profit margin of 39%, and they only borrow 7%. Again, nice, reasonable PE at 32.8x, and it's a small market cap of 6.6 billion. It's got room to grow. It's been 12 times on our top 20 list since July of 14. So look, there you have it. The top 5 stocks, best stocks to buy now. And we love looking for outliers because outliers are the ones that account for all the gains for the past 100 years. That's where you got to spend your time. If you want more information on what we do, head on over to mapsignals.com. If you like what you see, click subscribe. Of course, you know the drill, helps us get seen. Leave any questions and comments you like below. And I will see you soon. So with that, take care. Thanks for tuning in. Bye.